This is a brief briefing. Welcome to the show. A man who says he threw away a hard drive loaded with 7,500 Bitcoin in 2013 is offering his counsel 70 million to dig it up from the city's dump. He's in the dumps, I bet. In 2013, British IT worker James Howells accidentally threw away a hard drive with a digital wallet containing 75,500 little known and virtually worthless Bitcoin. Fast forward, and at the time of writing, Bitcoin is trading at around 37,000, and his store would be worth in the region of 275 million. It's a lot of cups of coffee. Now the Newport Wales local has offered his city council a vast sum of money if it allows him to excavate a landfill site where he believes the hard drive has been disposed of. Howells told CNN, "I offered to donate 25% or 52.5 million, $71.7 million to the city of Newport in order to distribute to all local residents who live in Newport should I find and recover the Bitcoins." This would work out to approximately 239 per person for the entire city. 316,000, the population. That's what it is currently. Unfortunately, they refused the offer and won't even have a face-to-face discussion with me on the matter. Here's the dump where he wants to go to rummaging about. Howells had mined the Bitcoin over the course of 4 years when cryptocurrencies were still in their infancy and worth very little. Howells threw the hard drive away between June and August 2013, believing he'd already backed up the files he needed from it. He first realized his mistake, he told BBC News, when the price of the Bitcoin spiked from 150 to 1,000, and his wallet was worth around 6 million in 2013. After visiting the landfill, Howells told the BBC he thought he had no chance of retrieving his hard drive. However, he now has a new plan to find it. The plan would be to dig a specific area of the landfill based on a grid reference system and recover the hard drive whilst adhering to all safety and environmental standards, because that is his greatest concern: environmental standards. Optimism soft launches Ethereum thoroughput solution with DeFi synthetics. Here we can see the team. They are very excited. Optimism has soft launched its solution to Ethereum's transaction problem, the optimistic virtual machine. The startup announced Friday that the OVM is now live at a time when gas fees have reached near all-time highs for decentralized finance traders. Indeed, the cost to send a single Ethereum transaction has hovered in the low single-digit dollars for the last month, a bit steep for the Internet of Money. First on the docket is DeFi exchange Synthetics, which has been working on an integration for some weeks now. The platform allows traders to exchange Ethereum-based synthetic contracts of real-world assets, including oil futures. The transition will roll out in 4 phases to limit risk to the platform. Synthetics co-founder Kane Warwick wrote in a January 14 blog post, staking the platform's native token SNX is now possible on the OVM. The team said, "We have adopted for initiating the transactions with the absolute minimum risk to layer 1, and then adding functionality over the course of the next few months as we build confidence in optimistic Ethereum," Warwick wrote. Optimism, formerly known as Plasma Group, has pioneered one implementation of what are known as optimistic rollups, or other rollup variants such as ZK rollups are layer 2 solution that acts as throughput booster for blockchains. These are not dissimilar in a general sense from Bitcoin's Lightning Network. A rollup allows a blockchain to settle more transactions across the whole network by sending transactions off-chain, validating them, and then settling the lump value on the main Ethereum blockchain. Most dApps have rollup solutions on the agenda. And I have tested that out, and I must say that it does reduce the gas fee from like $200 to $30. Though the OVM will reduce it even more. It is great. UBS wealth warrants clients crypto prices can actually go to zero. Strategists at one of the world's largest wealth managers are issuing a warning to newbie crypto investors plunging into record rally. You could still lose all your money. Between regulatory threats and central bank issued competition, there's nothing stopping a wipeout in big name digital currencies eventually, according to UBS Global Wealth Management. As Wall Street jumps on the Bitcoin rally like never before, the Swiss firm says prices may rise in the near term, but the industry faces exponential risk over the long haul, because we're going to make it difficult for you to deposit any money that you make from your crypto profits, because they've actually been doing that. Because I think they work with HSBC and they haven't been letting crypto transactions go through because they are jelly. There is little in our view to stop a cryptocurrency's price from going to zero when a better designed version is launched, or if regulatory chances stifle sentiment, since we have lobbyists to put some regulatory changes, and our stuff will be better. So don't get Bitcoin. With Bitcoin slumping back to 35,000, the famously volatile asset class is stoking debate among the world's biggest money managers. While famed investors, including Paul Tudor Jones and Sam Druckenmiller, are entering the industry, critics see gambling, scandal, and manipulation. In the near term, crypto prices could climb anew, powered by market momentum, institutional adoption, and limited supply. But over the long term, the market risks regulatory intervention, the strategists say, citing the UK's decision to ban sales of certain crypto derivative products to retail investors. Although derivatives are way more different than just straight up buying Bitcoin. A derivative is just straight up gambling. Only you're licensed to gamble. So a crypto derivative is no different than a stock derivative. I mean, if they just buy the asset itself, it has a whole different functionality, which this article isn't saying. And it's brought to you by Bloomberg. Bloomberg will always be Bloomberg. First mover, Biden's $1.9 trillion plan shows blue wave Bitcoiners saw coming. The Federal Reserve might need to print money to help finance Biden's coronavirus relief proposal to keep Treasury bond interest rates from climbing. A move above 42,000 will likely see a resumption of a hefty gains we saw last week, Warner said. Prices are up 29% so far in 2021 versus a 0.4 year-to-date loss for the Standard & Poor's 500 index of large U.S. stocks. In traditional markets, Asian and Europe shares fell and U.S. stock futures pointed lower on Friday. Boo-hoo! As anticipation of President-elect Joe Biden's $1.9 trillion relief proposal rolled out late Thursday, yielded to sober assessments of the state of the economy. Gold was little changed at 1,847 an ounce. Wow, market moves. First Mover wrote last October how a blue wave and then upcoming US elections, full control of the government by Joe Biden's Democratic Party could lead to trillions of dollars of new government spending on coronavirus relief and economic stimulus. That wave has arrived in the form of a $1.9 trillion coronavirus relief package proposed late Thursday by U.S. President-elect Biden, and some Wall Street analysts are now wondering openly if the economy and markets are becoming hooked on stimulus. The market is back to an expectation that more fiscal stimulus is all but inevitable. Ed Mills of the stock brokerage firm Raymond James wrote early Friday in a note to clients. Cryptocurrency investors could jump straight to the implication the Federal Reserve might need to print trillions of new dollars to help finance any extra borrowing by the U.S. Treasury Department. That, in turn, could spur more demand for Bitcoin, seen by a growing number of investors as a hedge against inflation. Hedging against it. Some Asian traders are using Polkadot to predict Bitcoin's future. As prices of Bitcoin and other cryptocurrencies continue to surge this year, many traders are looking for any indicators when or if the bull market will come to end. Some are convinced they have the answer. They are examining Polkadot, the native token of the Polkadot blockchain, as a potential canary in the coal mine for cryptocurrency. As of press time, Polkadot's price was at $12.49, up 12.4% in the past 24 hours, according to Mazari. It reached its all-time high of 13.22 during early trading hours in the US, just 6 days after Bitcoin's price reached all-new time highs. The market capitalization of Polkadot has surpassed XRP and Litecoin and is now the fourth biggest cryptocurrency by market cap, according to Mazari's asset tracker. Those using Polkadot to prognosticate Bitcoin's price point to parallels with another altcoin, EOS. Sources who spoke to CoinDesk, as well as social media users, especially on Chinese language platform, see parallels between the 2017 bull market prices of Bitcoin and EOS, the native cryptocurrency for the EOS blockchain platform. They said Polkadot, a project started by the Ethereum co-founder Gavin Woods, and goals of the EOS project, which was also born with the ambition of replacing Ethereum. After Bitcoin's price reached its peak in 2017's bull run, many investors and traders took their profits and moved them into the token like EOS, a period of time now called the alt season. They are looking for that alt season. Exchanges running out of ETH with reserves plunging 27% in the last 48 hours. Analysis predict Ether may soon hit a new all-time high after ETH reserves on centralized exchanges fell by 27% in 2 days. The amount of ETH held on exchanges has plunged over the past 2 days, with CryptoQuant data indicating that just 8.1 million ETH is currently sitting in reserves of centralized exchanges. So what do you think of all this ETH leaving centralized exchanges? Comment below. Don't forget to like and subscribe. Take care now and have a good one.